Hello and welcome to our Market Alert video for today, which is April 25, 2025. Thank you for watching. I am Ken Moraith, the founder and CEO of Retirement Planners of America. And we've got a lot to talk about this week, even though there wasn't a lot of data to talk about. So in this episode, we're going to talk about how long it takes tariffs to filter through the economy. When do we think that they'll have the effect? Will it cause a recession? And if so, what's the Fed going to do about it? How will that affect the stock market, the bond market? What are we doing about it? Oh my gosh, we got a lot to cover. So I'm excited to dive into it with you. For those of you who are not familiar with us, we are a firm that specializes in working with people who are over 50, who are retired or retiring soon. Our goal is to create as many squippers as we possibly can. And if you don't know what squippers are, squippers is the acronym for Second Childhood Without Parental Supervision. So we want you to go play, have fun, enjoy, and don't worry about all this boring financial stuff. Let us do it for you. And so that's what we're all about. Our website is rpoa.com. So let's talk about tariffs first. Basically, tariffs take about 2 to 3 months to filter through the economy and actually have the impact on the economy that they eventually will have. So if it's going to be inflation, if it's going to be recessionary, it'll take 2 or 3 months for that to show itself. So when will all of this start? Well, for the most part, right now, President Trump has said that the countries that did not retaliate have been given a 90-day moratorium. So July 4th is when that runs out. So right now there's a baseline 10%, except with China, of course, but there's a baseline 10%. That's not enough to really move the needle in any meaningful way in the economy. So yes, there's a little bit of it, but nothing serious. So for now, nothing to worry about. Now, come July 4th, if the deadline holds and everybody has made their deals and it's all done, which we doubt, but let's say that that was the case, then we'll know what these tariffs are. And likely they'll be more than that 10%. And if they're high enough, they could cause the economy to be impacted by that. So as we've said to you in previous videos, you know, our invest and protect strategy told us to sell, I think it's about 3 weeks ago now. And so we've been hedging our bets. We did not sell completely because the economy still seems to be okay. But we did want to hedge our bets against something really bad happening, which it still could. And one of the criteria that we look at is what's called the yield curve. And the yield curve has predicted every single recession we've had over the last 100 years. Now, to be clear, though, to be sure, it has also predicted recessions that did not happen. Okay, so it's 100% accurate on predicting recessions, but it also predicts more recessions than actually happen. However, right now, the yield curve is inverted, meaning it is saying there is a recession coming. And it actually said that before President Trump announced the tariffs on Liberation Day. So we were already looking like we might be heading into a recession. So any tariffs that are actually implemented would not help that situation in our view. So when will all this take place? Well, if July is when the deadline is, and assuming that it's all done by then what could happen is that it would take 2 or 3 months for the effects of those tariffs to filter their way through the economy and cause a recession or cause unemployment or cause nothing. But it'll take time for that to happen. So in the second half of this year, if we are going to have a recession, we think that's when it will be. And if we do have that, we could see a pretty good sized drop in the stock market. Now, as we've said in previous videos, we agree with the goal that President Trump has. We can't continue to subsidize countries around the world to the tune of hundreds of billions of dollars, which, by the way, we are borrowing that money and then giving it to them in a subsidy, and then we're paying interest on it and increasing our national debt. I agree entirely with what President Trump is trying to do. Just as in the past, Ronald Reagan raised interest rates, or Paul Volcker, to 20%. Can you imagine the criticism that they were getting back then when they raised? Imagine if they announced today that we're going to raise interest rates all the way up to 20%, not the 5 that they're at now, but 20% interest rates, mortgages, all of that at these super high rates. Can you imagine what the stock market would be doing? Can you imagine what critics would be saying? You're trying to destroy everything. You're going to kill the economy. You're going to give us a Great Depression. And we did have a pretty severe bear market back in the early 80s. But we got past it, and we had a period of great prosperity. So, yeah, there's going to be a transitionary period as we get there. And tariffs certainly could cause a recession, could cause inflation, could cause unemployment. So, what does the Federal Reserve do? Boy, they have a tough job. They have 2 mandates. One is labor, jobs. They want to keep jobs high, and inflation low. Well, the challenge they're going to have in that's a possible scenario here is that we go into a recession at the same time that we have high inflation or inflation stays high. That's called stagflation, which, by the way, is one of the worst things that can happen to an economy, if not the worst. So if we have stagflation, they have a conundrum. If they say we want to raise interest rates because inflation's going up, it'll cause more unemployment. It'll cause the recession to become worse. On the other hand, if they say, well, we don't want that, we're going to lower interest rates so as to make the economy grow, well, guess what? That'll cause inflation to go up. So which one will they prioritize? In our view, most likely they will prioritize inflation. It's the hardest one to get rid of. It is the cancer that an economy can have. Unemployment can be fixed. Inflation takes a really long time, as we've seen. So what does that mean for the Fed? It means that probably they will not be our knight in shining armor if we go into a recession. They probably won't be able to do much. They won't be able to lower interest rates because it'll increase inflation. So it could get pretty dark. And so for us, we're glad that we've positioned ourselves, where we've hedged our bets. Because, as I mentioned at the start of this video, we work with people who are over 50, who are retired or retiring soon, okay? So our goal is to get them to retirement and then keep them there once they're already retired. And to do that, we have to view the world differently than maybe someone who works with younger people might look at it. We believe that growth is important, but protection of principal is even more important. If you're going to live on the money you've accumulated for the rest of your life, 30 years potentially, then you have to protect that nest egg. If it's going to generate income for you to live on, you have to protect it. Because if it goes down in value and you're taking money out at the same time, you're doing what farmers call eating your seed corn. And if you do enough of that, when growth season comes, guess what? You may have no seed left to plant, and that would be disastrous. So if you are within 5 years of your retirement, or you're in the first 5 years of your retirement, if you're in that decade, we believe that the way you think should be different than the way you thought when you were younger and you were on offense and you were growing your money and you were aggressive and you're doing all this stuff. Now, the paradigm has shifted. And in our view, you should be thinking more like a defensive coach on a football team than the offensive coach. You should be thinking about, how do you protect your lead? How do you protect your net worth? How do you generate the income that you need? And that's what we specialize in. So, and by the way, I've said this many times, but it always bears repeating. Our strategy, which is the one that I just described, our invest and protect strategy that said to sell about 3 weeks ago now, is the same one that said to sell before the stock market crash of 2008. It actually said to sell in November of 2007. We counseled our clients to stay out of the stock market for almost a year and a half during all of 2008 and half of 2009. So, and that was a 57% drop in the stock market from the peak to the trough. And so we want to protect you from big, bad losses, because we think that could impair your ability to retire, or it'll impair your ability to enjoy your squipperness, to enjoy that second childhood without parental supervision. Now, if our philosophy resonates with you, go to our website. It's rpoa.com. Check us out. Meet with one of our retirement planners. Attend our seminars. Listen to our podcast. We have over 300,000 downloads over the last year on our podcast. You may enjoy that too. So one more request of you, please, and that is like and subscribe to this video. Share it with your friends and family. And I hope this video found you healthy, wealthy, and wise. And we'll talk soon. Retirement Planners of America, RPOA.com.